What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is the fact that the margin calls that we're going to be seeing in the near future are going to be larger than any other wave of margin calls that we have ever seen in the past. Now, we're going to go over all of the evidence for this. We have two proposed rule changes, and we are going to go over the actual margin debt that is out in the market right now and how it is going to play into this entire situation. So we have a lot of important information to cover, so make sure you guys stick until the end of this video so you're caught up on everything going on with AMC. So before we get into all of that information, if you guys would like to earn 2 free stocks with Webull, valued up to $1,850, make sure you check out that link down below in my description. Now, all you have to do is sign up for an account and deposit over $100, and you get access to those 2 free stocks. And guys, if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. Costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. So when we're looking at the chart of AMC, we can see that today we are having a pretty significant red day, and we are now trading at around $12.90 at the current time that I am recording. So if you guys watched my previous AMC video, it was all about being aware of the fake squeeze that we were going to see in the near future. Now, the reason for this is that when the voting day comes around on June 2nd, the hedge funds do not want the AMC apes to be holding a significant portion of these shares of AMC. Now, the way for them to actually manipulate this is to let the share price of AMC run up and then crash it. So we are seeing a significant red day today, but what you have to remember is that AMC has just gone on a streak of massive green days for the past 2 weeks. So this is kind of a healthy pullback that we are seeing, but when we come over to Google, we can see all of this FUD being spread about AMC, specifically the Motley Fool. Will AMC Entertainment go bankrupt? This is an absolutely terrible article. That we all know that AMC and bankruptcy are not going together at the current time. Bankruptcy is completely off the table at the current time. Now, we see from Seeking Alpha, AMC stock, the path does not look pretty. Market Watch, horror movie, run away from AMC stock as if your life depended on it. Now, we all know that all of these different sites right here are getting funded by the hedge funds. So it's really, really important that you guys try to not pay attention to any of these hit piece articles that are coming out about AMC, because they are paid for and funded by the institutions that want these to see the stock go down. So now let's get into this margin call situation. So last week, we heard some rumors that some institutions were receiving margin calls. Now, that could have played a role in the AMC run-up that we did see towards the beginning of this week. But at the same time, we have been seeing a pretty significant sell-off in some of the tech names, some of the more hyper-growth names that we used to talk about on this channel all the time. And the fact that the entire market is incredibly over-leveraged at the current time, which we're going to prove a little bit later in this video, proves to me that these margin calls are not going to end anytime soon, and they are right around the corner. Now, in my opinion, these margin calls are going to be much larger than any other wave of margin calls that we will ever see in our lifetime, and here is why. When we come over to this Reddit post, we can see that ICC 2021-007 was passed and approved today. Now, this post came out yesterday, so shout out to this individual for putting this synopsis up. So this is much bigger than ICC 005. This updates margin requirements hedge funds must put up required by brokers to maintain their positions in a trading account, and now the margin requirement can be increased immediately based on the volatility, price fluctuations with their assets, increasing risks in the market, such as risk shorting AMC and GameStop. These increasing risks could include a predictable short squeeze coming soon. Now, this is very big news, and here is why. When we come over here, we kind of have to go over the basics of what margin is. So how does initial margin work? To open a margin account at a brokerage firm, an account holder first needs to post a certain amount of cash, securities, or other collateral known as the initial margin requirement. The margin account encourages investors, traders, and other market participants to use leverage to purchase securities with a total value that is greater than the available cash balance in the account. A margin account is essentially a line of credit in which interest is charged on the outstanding balance. Now, when your account value or the equity position in your account falls below the initial margin, that does not automatically trigger a margin call. Now we have to come over to something called the maintenance margin. So maintenance margin is the minimum equity an investor must hold in the margin account after the purchase has been made. It is currently set at 25% of the total value of securities in a margin account as per the Financial Industry Regulatory Authority, FINRA requirements. So essentially what is going on here is if we tie this all together with this new ICC 007, if you have a position on margin, and when you're shorting a stock, you need to have a margin account in order to do this because you are borrowing something and selling it on the market that you do not own. So what's going on here is that we've seen this in the past. When your position goes against you, and let's say that your equity position falls below the maintenance margin and there's a lot of volatility going on in the market. Now, the broker that you're trading through can actually raise the maintenance margin requirement, and you're already in a margin call. So this makes the margin call that you are going to receive as a trader much higher than it would have previously been. Now, coming into this AMC and GameStop situation, we are all predicting an extreme amount of volatility. Now, with the margin requirements where they are right now, the maintenance margin requirements, I could predict these numbers could massively increase. Now, some of these institutions that may not even be close to a margin call at the current time, if the maintenance margin requirements increase enough, it could push these institutions into a margin call as well. Now, if we see the first domino fall, this is just going to continuously increase this maintenance margin requirement, and it's going to topple these other funds as well, creating a domino effect down the line. Now, this is not the only time that we have seen something like this come out. We have seen NSCC 005 come out and increase the actual requirement for the amount that funds need to deposit into the DTCC in order to be a member from $10,000 to $250,000. Now, we've also seen, this is a little bit older, but from Charles Schwab, due to recent market activity, we've adjusted margin requirements on certain securities. Please note, neither Charles Schwab nor TD Ameritrade halted clients from buying any stocks or selling stocks they own, and neither firm restricted executing any basic option strategies. However, we raised margin requirements on the following securities. We'll keep this list updated with the latest information, and right now it is currently AMC and GameStop. For stocks, 100% margin requirement for long positions. For short positions, 300% margin requirement. So they are upping these margin requirements in order to trade on margin. This is one of the reasons why you hear everybody say, do not trade on margin, switch to a cash account, because one, your positions can get closed out at any time due to these margin requirements being increased, and two, these shares can actually be loaned out without your knowledge. We also have another proposed rule change that we need to cover as well. When we come over here, this has to do with the stress testing that occurred last week and the week before. So OCC is issuing this information memorandum. So we can see the date on this is May 17th to notify clearing members of a temporary increase in the size of the clearing fund. OCC recently discovered an error in the treatment of its liquidation cost add-on charge in the clearing fund shortfall calculations. This error has resulted in the clearing fund being sized at a level below the amount that should be required under OCC's stress testing and clearing fund methodology. Now, with the result of this, the temporary increase would result in an increase of $588 million to the clearing fund, which will be allocated proportionately among clearing members. Clearing members with a deficit in their portion of the clearing fund will receive a notice today, May 17th. So this came out 2 days ago. Now, when we come over to the actual members of the OCC right here, there's about 200, there's 800 some members here, 879 members, and Apex Clearing and Citadel Securities are members of this organization. Now, when we come over here, this is something that I have pointed out in a couple of my previous videos that I think is incredibly relevant and everybody needs to fully understand. This is the FINRA margin debt and the S&P 500 real values adjusted to present day dollars. We can see the red line when it trends down is actually going up because it's inverted. Well, it's inverted because they want to show a divergence on this chart from the S&P 500. But we can see that the total number of margin debt out in the market right now is about 822 billion. Now, what we are seeing from all of these different regulatory institutions is that one, they're upping the amount of money that they're taking in, so that $10,000 to $250,000 requirement from the NSCC and from the OCC, they need $588 million more dollars. And we are seeing the ICC come out and saying, well, if we see some severe volatility coming in the market in the near future, we have the right to increase margin requirements on you at that time. So here's what this essentially means wrapped up in a tiny, nice little bow. So all of these regulatory institutions, with the fact that they're increasing all of their margin requirements and actually saying that they can increase the actual maintenance margin if they see it fit in times of volatility, they are predicting a massive event coming in the near future. Now, what could this event be? In my opinion, this is going to be massive margin calls coming across the market that is going to cause this AMC short squeeze. Now, when we come over to this chart right here, this is the United States leveraged loan default rate. Now, this isn't just margin, but this does give us a very interesting insight into what the actual default rates are and where they're going to go in the future for these leveraged type of loans. Now, we can see here that it has spiked since September of 2018 and in March of 2020, but we can see that through the rest of 2021, we are expecting this rate to get almost as high as 6%. Now, with all of these margin calls coming out, we could see a massive wave of defaults coming out. We've seen these stress testing in these netting accounts being opened up. All of this is pointing to big margin calls and a severe risk of default coming in the near future. Now, this is very good for AMC shareholders. When you think about it, AMC and GameStop and a couple of these other stocks that have been aggressively shorted, and these funds are way over leveraged on these positions, these forced liquidations and forced share recalls that we have been seeing recently are very bullish for AMC, because when you forcibly close out a position, you create a bunch of buying pressure in the stock, which could then create a positive feedback loop of pushing the stock price higher, and other institutions and funds need to close out their position as well. So we have a very big couple of weeks coming up ahead for AMC. So make sure you guys get prepared. We are going to see a lot of volatility, especially going into this June 2nd date. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.